Hi everybody, this is Gary Demas, Sentiment Timing, and this is our technical video report for Wednesday, May 21st, 2025. So I've been telling you guys for the past week to watch out for May 21st, and the original time period that I was looking at when that basically the lows that came exactly when we thought they were. So that was on April 7th, and I'm sorry, I'm looking at the wrong. This is the 15-minute. Hang on one second. Okay. So we were looking at a low coming on April 7th there in this time period. That's exactly when it came. We had our sentiment indicators that were complete fear, and we knew this was going to be the low here and started recommending some high growth quantum stocks that have done very, very well. As a matter of fact, I just calculated them, and during this time period from here to here, they were up well over 100% on as far as just putting an investment in. But in any case, this was, you can almost go in the cycle with just say retail traders. And the reason why I was getting bearish up here was we had the put call ratio that was at extreme bullish readings. We had the VIX that was at like 13. So basically what happens is when you get the retail investor that is trading with no safety net underneath, what happens? They typically pull the rug out, and this is what happens. And then they buy the whole time because they think that they're going to get they're going to miss the next big bounce. They finally get it here. And this is when we actually saw the put call ratio go back down into the extreme bullish territory, and then it shot up into the extreme bearish territory. And this is when we saw the VIX shoot up to, I think it was 70. I don't have the chart in front of me, but that's my indication that we are coming into the timing cycle for a low. We had all the retail traders just jumping off the ship. We had every news organization out there saying this is the end of the world, and we were buying everything right here. And we stayed long all the way up until this area here when we got this gap up. And I said, okay, we now have really investor sentiment that's at extreme bullish sentiment readings, because we had the put call ratio, as I show premium members, was at basically levels that where we lower than levels than where we were here. So the safety net that they were running with here, they threw away even more here. But the VIX wasn't down at those levels, but I don't think retail traders really do VIX. So this was when we had the put call ratio that was at these levels. I didn't say to short the market. I was just saying be very, very careful, because typically when we see the VIX at very low levels, and I think it was at 18 or something, but when you had the put call ratio that was at lower bullish readings than when we were at the last top, that's where, I said it. And then we had the turn date that was coming on the 21st. So it was more just a matter of time on waiting. And this still isn't even anything crazy. I mean, it just was a really, really bad day for the S&P, down 95. But we should be heading down to a bare minimum of like anywhere from the 57.02 down to the 55.37. These two levels make place. Can we go down and test the 5,200? Yes, I've been saying that. We also have a gap at 51.68. So can we go a lot lower? Yes. It's just a matter of what the velocity of change is as we go. If we end up that we're down here, and there's still another 3 or 4 weeks left before we're looking for a low, guess what? We're coming down here. If we come down here very fast and we still have a couple weeks left, we're probably coming down here. And that's really the way you do it. You have your timing window where you're expecting the bottom, and you just see the velocity of change. If it really is going down hard, then most likely we're coming down these ways. Now, if we come down and bounce in this, then most likely we're just going to be doing some type of consolidation, and we may end up down at the 5,500 level. But it's, coming from where we were to, from where we were to here, if we come down to the 5,500, that's more just a time thing that we burned off. And it was nothing really major, even though you'll probably have a lot of the retail traders just jumping off the ship because they think that we're going to be crashing again. But in any case, that would be more a time thing. And then from once we hit those lows, I'm expecting the S&P to fly right by the all-time highs, and we'll probably end up somewhere up into the It could be, I'm not going to put numbers out there. It could be 6,500. I don't know. I have no idea. That's above my pay grade. But right now, what we want to see is what's the velocity of change coming down, because we have an idea when the date is that we're supposed to be looking for the low. But if it starts shooting down fast, then we got to expect that we're probably coming down to the 5,000 level. So that's the way we do it. And that's the reason why I've been warning everybody up here and saying, there's just too many people that jumped on the bullshit, and they probably did it right here on this gap up and thought they were right. So every dip that was coming down, even if it was 20 points, was getting bid back up again, because all the people that missed this entire run, once this happened and now all of a sudden the news media got all bullish, this is what happens. They buy every dip. We just go nowhere. And now they're in, and they pull the rug out like they just did. So we actually had a fantastic trade today, because I have some other I have software that I'm using that has different projections, and I'm using that along with my Gann cycles and stuff like that. But it was right in this when we got the pop up, and well, actually, what happened? Let me just go do this. Is the easier way to show it. So this was the gap down. That was yesterday. This is our gap down today. Oh no, that was at the end of the thing. Here's our gap down today. So we gapped down, crawled our way back up again, and once we were up in these levels here, it was well, I was using the spiders. So when we were up here, the spiders was at 592.65. And basically what I said, I put out in the room, and this was it. I said I'm taking the 592 puts. They were only 84 cents when I bought them. And it ended up being just the perfect timing, because that was that email or the group message that I put out in the trading room came in at right around 12.50 right there, and it was within 15 minutes. The 80 cents that we paid for these, or that whoever bought them, they were worth close to $9. So it was one of the easier trades I ever made, and it was, the problem that I had is I had my target. So let's just say the target, because I know the spiders has different numbers, but let's just say my target from here was the 58.83. So I started unloading stuff, and then when we got this bounce, I thought we were coming up, and I actually sold the rest. Still did pretty good for the day overall. I think we made 3,100. So again, it was it was more that was I didn't realize we were going to continue down on it, and once we came to my target, I started locking in profits. But this is where panic starts setting in now. So now we get a bounce, people are going to try to rally it back up, and if we do get it, I wouldn't be surprised to see us trading, see the S&P coming up to 58.99 and possibly even up to the 59.16. Really, the line in the sand for the bears is going to be if the bulls can get it above the 59.40, then we're going to come up and look at a double top, or possibly even making it up to 6,000 level. But today was the 21st. It was a big day, and this is what we got. Now I mentioned that we have the 24th, but that falls on the weekend. So if we do get a bounce tomorrow, I'm not saying this is going to happen, because I want to see what happens tomorrow, but we could see Tuesday wake up and just see a serious downside. But again, take it day by day right now. It just, the way that we were up here, it does make a topping pattern like this, and that's what I was looking for. So anyway, if we get the bounce, again, I'd look anywhere from the fifth. I think there'll be sellers at 5,900, and then up at the 59.16, and if it gets back up to the 59.40 level, I think there's going to be a lot of sellers, because a lot of people got trapped on this. So if we're going to continue lower, you can see this is the support zone I was telling you about. So it made it to the top of it. We got a little bit of a bounce, and that was it. So you can see the bulls have to get above the moving average 58.76, and then they have to get above the 59.03. This is the bull bear line right here, the 57.84. If this is getting taken out, you can say this is support right here at 57.22, 57.04. My guess is they're going to come close this gap right here at the 56.75. They're going to have to start closing some of them, because if they don't, and they just continue higher, then what's going to happen is we're going to get one of these rallies that's made on quicksand because or with toothpicks because there's no foundation. And if they keep doing this, and you can see we have 1, 2, this was down, we have 3, then we have 4. So excuse me, you have 4 big gaps that we have here, and that's a foundation made out of toothpicks. And once one goes, they all start crumbling, and that's why I'm not ruling out that we can head down to the 5160. But for now, this doesn't look like anything major. It's right now. It's just coming down, and these are the levels we want to look as far as pivots. The first one obviously is going to be they have to get it through to 57.82. There could be some support at 57.16, but my guess is they come down to the 56.75. So one thing that's also given me a little kind of clue that we could have a bounce is we do have some bearish divergences here. So if we're going to do an ABC, that's where we start looking up at these levels here. So if you didn't get the email that I sent, to check it out, just check your inbox on it, because it has a lot to do with everything that I've gone through over today and really for the last week and since April 7th. It's these timing models. A lot of them are through GAN that I follow. It's some software that I have. And then from there, it's other software that's letting me know, they're giving me pivot points to start looking where to either be looking to short and go long. And then my regular technical analysis on, doing this for so long, it just makes it a little bit easier when you have an AI telling you, this is the pivot that we're going to. And, and it basically does. So it's a new offer that I have out there. Check your email. I'm only taking a select few because it's a trading room. I don't want to see, 1,000 people in it and then, having questions asked or this. So it's going to be, a few that are there. It's interesting. It's a fun place, but people make really good money with it. Like I said, today the option trade was 82 cents. 15 minutes later, you could have sold them for $9. So if you're interested, everything is inside that email. If you have any questions, shoot me an email. And with that, have a great night, and I'll talk to you guys in the morning.